The jam from this melt-up market's donut of exuberance. The deer is back. Small caps collapsed, crashing almost 5%, worst day since June 2020. The S&P was down 2%, its worst day since December 2020, worse than February 2023's SVB crisis drop. Some late-day profit-taking painted some lipstick on this pig of a day. Plot twist, as Hugh Hendry said, "This is me hearing about today's inflation print. My biggest takeaway from Aujertwi is that we just made next month really blinking important." "We were ripe for a pullback, right?" said a CNBC anchor, in some odd way trying to soothe investors. Some L/S hedge funds had a good day as their shorts crashed, but their longs were not happy, and it's been a bloodbath for them in the last week. However, we suspect this was as much about degrossing, closing longs and shorts, as any actual wins. Source: Bloomberg. Most shorted stocks plunged over 6%, the biggest decline since June 2022. Source: Bloomberg. The Magnificent Seven stocks puked at the open. Buyers stepped in, as they do, but were then clubbed like a baby seal. This was MAG7's second worst day since October. Source: Bloomberg. ARM was hammered. But, of course, Nvidia escaped with barely a flesh wound as panic buyers stormed back in after the initial plunge. Who could have seen this resurgence in inflation coming? Well, we've been warning about animal spirits 2.0 for weeks as the lagged impact of the massive loosening of financial conditions last year flows wondrously into the real economy and lifts all economic expectation boats. Source: Bloomberg. CPI's hot, too damned hot. And being too hot marked the death of hope for March rate cuts. Forget May rate cuts. At the moment the first cut is priced in for June, and as of today's less than 4 rate cuts for the whole of 2024, in fact just a 50% chance of 4 cuts, conditioned on 3 cuts. As a reminder, in mid-January, a month ago, the market was pricing in 170 bps of cuts in 2024, now it's half that. Source: Bloomberg. Treasury yields exploded higher after the CPI print, after bonds were aggressively bid into the print. Source: Bloomberg. Led by the short end, 2Y plus 17 bps, 30Y plus 8 bps. Source: Bloomberg. The yield curve bear flattened dramatically, 2S30S-8 bps, to its most inverted in 6 weeks. Source: Bloomberg. And as bond prices plunged, the dollar soared, breaking above its 100 DMA to its highest since November. Source: Bloomberg. Gold puked back below $2,000, erasing all the gains since the December FOMC. Source: Bloomberg. Oil prices rallied today, with WTI back above $78, breaking above its 100 DMA and 200 DMA, first time breaking above 100 DMA since July 2023. Source: Bloomberg. Messrs. Biden and Powell have a problem, pump prices are about to soar. Source: Bloomberg. Bitcoin ended lower after reaching $50,000 yesterday, but found serious support around $48,500, quite impressive given the monkey hammering that megacap tech got. Source: Bloomberg. As Bitcoin ETF net inflows continue hot. Source: Bloomberg. Finally, as a reminder, skews had collapsed to pre-Volmageddon levels into this sudden narrative collapse. VIX spiked up to almost 18 today, and 68% of gamma is wiped away tomorrow in VI expiration. Source: Bloomberg. And skews are blowing out too. Source: Bloomberg. That's a big unclench from here.